Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 28th of September, 2021. This is episode number 2082. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's jump right into our pre-market summary sheet here from Convergent Trading. We see that the market has a mild risk off stance, mild risk off this morning. That's the overall picture we see today. This is driven by a few things: the fiscal deadlock, the fact that the Republican senators declined or nayed yesterday's bill to suspend the debt ceiling and to fund the government. 2 days remain in government's funding. They're going to have to do something to avoid a shutdown. So the debt ceiling, the fiscal deadlock is an issue. The other issue are comments from the BOE and concerns about interest rates. You can see that the treasuries, I meant to actually do this yesterday, the treasuries have been moving in an interesting way. So let's not go too far back, but I really love this chart here. You could see in this section the date and the price of the S&P, and what this shows right here is the yield curve. So the yield curve is just the yield for all of these expirations or durations: 3 months, 2 year, 5 year, 7 year, 10 year, 20 year, 30 year. Okay, and this here tells you the condition of the yield curve. And overall, when we run through what it has done, you can see that during the crisis here, so starting February 2020, you can see that the short end of the yield curve, here, which is what the Fed controls directly, that short end of the yield curve comes exploding down. You see how that yield drops, the interest rate drops to zero, and the entire yield curve then goes down. And then you could see that as 2021 comes around, you could see the long end of the yield curve rise. You see that rise there? This is part of what has the market concerned. You could see that the short end is pegged, but the long end, so now we're in May 2021, you could see that the long end is really trying to break higher. And that's where we are. So recently, there's just been quite a bit of movement in the 5, 7, and 10-year portion of the yield curve. The market's paying attention to that. The yield curve really provides a view into the anticipated value of money over time, so, or inflation, and represents monetary policy. So that's really what I have. Techs are getting hit pretty good. There's concern. There's still that overhang from China, global growth, demand. Demand is still in play. Supply is still stunted, and that's where the market is. We did have Case Shiller. This is from July. Not really that important, but it's still out there. We do have a lot on the calendar today. ECB's Panetta. We have the U.S. consumer confidence. Fed's Chair Powell. Again, J-Dog talking at 10 Eastern. Schnabel from the ECB at 11. Bowman at 1:40. Panetta again at 2. Bostic at 3, and then API crude oil stock change at 4:30 Eastern, about a half hour after the close. And then at some point, the ECB forum on central banking, I guess throughout the day. And that's where we stand. In terms of where the S&P is, the S&P is really in a multi-distribution profile, but frankly, this looks a whole lot more like a B-shaped profile or a long liquidation profile. We'll look at that in a minute. This was really an impulsive move down in the S&P. Oh, by the way, Yellen speaks to Congress too today about the debt limit. Nothing's going to be earth-shattering there. But what we did have is Europe really hammering on the bid and selling off right off the open. It's not really attributed to one particular thing, but there are concerns in Europe over energy prices and various other items, and that's where we stand. So we're looking at the S&P having a multi-distribution profile. 340,000 contracts have traded. This is rounded up. 85% of the inventory is short. The range is 54. We're looking at most likely a relatively busy day with the point of control right below 4,400, 43.98. Now, I did expect a 44.16 test yesterday from above. I expected the range to push to 44, 45, down to 16. We couldn't get the 16. We hung out at 25 or something. But today it's definitely blown through that area, and it's back into the gap left behind from a week ago Monday. So that's where that stands. Let's take a look at what was expected yesterday. So yesterday, the primary scenario, again, to push into the 45 area, which it did very well. And then the expectation is it would roll over and push into 16 and a quarter. But yesterday, really poor action. There were a couple of decent setups, like scalping type setups. But overall, the market didn't do what was expected, given that Friday was inside of Thursday. We expected there was an elevated probability that we would break the high or the low. Expected the high to break, given the one-time framing we've been experiencing and the fact that we filled the gap and came all the way back. So these are the two key scenarios for yesterday. Here's what actually happened. Let me clean this chart up. This is what we got yesterday. We had a very clear and clean opening swing in the morning, and then we went below the open. This is the opening print. This green line is the opening print. This green line is the prior day's low. This is the prior day's high. And then we simply made a channel going downwards, and it looked like it wasn't going to give us that 45. Then it breaks the channel, pulls back into this area, and then starts to squeeze higher, pushes to 45. So 45 was the key area above. As mentioned, that was scenario one. That's the little chop that you saw before. We expected the market to release down to 16 being down here, and it ended up holding the 45. So good, check mark. And then we saw a really nice structured setup right there. And it gave a chance on a failed retest there with a very clear risk-reward potential. And then it pulls back, and then we get this just garbage into the afternoon. And what we had is a relatively balanced profile, and the market essentially moved the point of control down, but it stayed within the prior day's range. So it got the overnight stat, it got the IB stat, it did a lot of stuff, but it certainly stayed inside. So what we have is 3 days of trading within the same range, which is 45 down to about 16. That's 3 days of compression, and so we expect the market to break one way or another. In fact, I think I put that in my homework on the Head Trader channel. Head Trader channel last night, right? So 6:46 p.m. yesterday, Chicago time. Today's open and close were basically at the same price. So what we had is a day that just finished almost exactly where it opened. We had a bit of a doji there, but it wasn't at the top of anything. The heavy volume is now between 44.28 and 44.40. We would need to see two things technically: a break of prior high or low, a persistent move in that direction. This provides a real clear target and risk area. So that's basically what we got overnight. We got a break of a key this compression area, and we're opening in a gap. And so today we're going to favor the short side, um, structurally favor the short side, but the early on we expect the market to be responsive, and that gives us an opportunity to sell better or to sell at better prices. So that's yesterday. You could see that the delta was sold into the close and remained short as we come into the session. Today, we open up, we chop around in the Europeans, in the Asian session. We do end up taking that 25 out pretty early. We go down to 21. Attempt to push again to the 44. Remember the 50 to 56, actually the range between 45 and 50, 45 to 56 really. Very heavy activity there during the day session. I see a lot on the tape, a lot of prints, persistent icebergs and so on. To me, it just looks like we don't want, during the day session, we do not want to breach this big area up here, this 50-55. So the expectation was that it will likely, if it's not able to get through it and push to 80, which was scenario 2 yesterday, then it's likely to move back to where we were last week and where we had acceptance last week, which is mostly in this 30s, 43, 86, 88 area, which happens to be the low. So this is the high volume node right here. Okay. So what we're doing is we're opening in a gap below this morning in an impulse, and we do see a continuation. We see it stair-stepping higher, and we are well below the full session VWAP and full session mid. So today is going to be very interesting this morning, because the question that has to be answered is, do we accept the last accepted price down here? You know, this was last, Wednesday maybe? Thursday, Wednesday. It was last Wednesday that we were down here. Do we accept these prices and chop around here and build balance down here? Or is this too cheap and therefore advantageous to buy, looking for the market to push back towards that 16 from yesterday, the target from yesterday, which puts us in line with the full session mid and so on? That's an area that I'm looking to sell on a first test. Okay, so that's a setup for me right there. So that's where we are. Pretty decent delta, selling delta in the overnight session. Delta's moving with price. We want to see what gets follow through this morning. So tough morning to look at what we have, where the edge is. So this is the bigger picture. Let's get rid of this trend line that's been cracked. Bigger picture. Boom. We have balance way up here. So 45.30, I think. 45.25, big area up here. So we see that in a composite. Then, boom. We see the 44, 43, 44, 39 composite. So this is your next accepted area. You can see, I mean, from week to week, each one of these gray boxes, each one of these little boxes is a week. They go from dark gray to light gray to dark gray to signify a month. So we're approaching the end of September, so we're in the 4th week here. So 4 gray boxes. And what we've done is we've moved back up right into balance at 44, 41, 44, 45, 44, 50, whatever. It's plus, give or take 15 points essentially when we're seeing things from that highest stage. And what we've done is we've rolled over out of balance. See this compression, see that triangle? Look at that beautiful triangle here. We broke below. This is bearish. So we're looking for a response, if there is a response, which would be kind of the ideal play. If there is a response, we're looking for areas to sell against predefined resistance, which is where the stock zones that I put on the screen come from. And then I'm looking for it to rotate And really, the area it wants to, the next big area to test is right there, this high volume node, which is 4380, and below that's 4350. If 4380 doesn't hold, this low at 4300 is very vulnerable, and we may finally see some selling. So what this will look like is new all-time highs, big pullback, lower high, continuation. This is the pattern that I've talked about, that the bigger picture is bullish until this kind of shows up, and we're potentially building that. So this 55 here is going to be very important, and we're likely to start examining 4380 in the next few sessions. The overnight low is 4388. We almost got to this high volume node. And if that doesn't hold, then you have 30 points of room down to 43.50 on that swing short if you're going to take one. Okay, so keep the big picture in mind. I see that range has been collapsing, but I expect range to really accelerate upwards, to turn up. I expect higher volatility, more volume. If we try to respond and fail, I expect the market to just come in and dump them out. In that case, we have higher volatility. So to you as a trader, that means wider stops, wider targets, smaller size. Cut your size down to a 1 micro if you have to. Don't let your ego get in the way. Just stay nimble and stay in the game as long as you can, okay? So a little overview of what's going on here. So this is the bigger picture across the board. So you could see that I talked about this yesterday. We are tangled in the monthly VWAP and pulling back down now finally. Same with the Dow, and the Nasdaq just kissed its monthly VWAP. VWAP being built on volume, This Nasdaq move here is really not looking very good for the big techs. And it's looking awfully weak, okay? Crude has moved really fast away from its consolidation. Crude appears to be overdone at the moment. I would expect crude to roll over in the next day or two and come and revisit this 72 area at some point. We'll see how that goes. Gold is running away from its VWAP. It's still moving away, moving lower. So is silver, the bonds, the notes and the bonds. I have these reversed. I like to go bonds, then notes. The bonds really impulsing down, and this is a lot of what's driving the Nasdaq, and probably what's driving the ES to go lower, right? To lower notes and bonds, higher yields on those maturities. So this is what we're looking at. As far as currencies, the dollar, the currencies are correlated with metals in some way, shape, or form, right? Currencies are also correlated with crude. The dollar is correlated with crude and other commodities. And currencies, we expect them to move in the same way as the treasuries and the metals. So all of this is telling us that we may see an extended move down, in my opinion. But again, I'm not an analyst, a long-term analyst, but I like to take a look at the overall global macro picture and how that's playing out along with what the market is actually pricing in. So ultimately, decision making is based on market prices or market activity, but I like to know what forces lay underneath. So let's take a look at what's expected for today so you can go on about your business. It is already 8:21 Chicago time. Here we go. So what are we looking for this morning? Really a tough to put a plan to it. What I do know are the key areas that I'm monitoring, right? So I'm monitoring the 16 down here. I'm monitoring the 28, 27, 28, back into the 35, These levels have seen a ton of play. I mean, stock zones have outlined or close to outlined the highs and the lows of swings. They've been the stock zones, like I said a few weeks ago, maybe 3 weeks ago, that there's a lot of structure in the market, and it makes for really good trading because when there's a lot of structure, we have some really well-defined risk-reward scenarios and good R factors. And that's what makes money, in my opinion. And then above there, of course, the 45. So that's the map of what's above. The map of what's below is, and we blew through it overnight, is this 06 area. We have a minor level at 93. We have a minor level at 93, and then we're moving into 84.80. That's the high volume node down here. This is the big magnet. And then beneath there, we start to make our way down into this 50 down here, which is a high volume node, mid-century figure, and so on and so forth. So what does it look like? We're opening in a gap. Yesterday's low is down here. We have some resistance potentially in the 21 to 25 area. So any test into 16 through 27, I'm going to be looking for signs of weakness, inability to push through, and I'm going to look to sell and use the next, we're trading level to level to level, not in the middle. And so I'm looking to take the turn and ride that to the next key area. So we are at the 06. We're against VWAP in the overnight session. The overnight point of control is beneath us. I'm expecting this to be responsive this morning. I'm looking for resistance at 16, potentially pushing through the 16 a little bit. But overall, I'm looking for the overnight point of control stat. And that stat says that we are likely to touch the overnight point of control in the day session 83% of the time, something like that. And then I'm looking for it to break through into 84, which is just a little bit through the overnight low, giving us the overnight stat as well. So that'll give us the overnight stat, the IB stat, the overnight point of control stat. So I'm going to be modest here with my range, looking at potentially 20 to 84.80. That's a fair amount, 84.80. That's what I'm looking for today. And if that happens, then look for a bounce into the close. That's your first scenario. Again, trade from level to level. Make sure that you're predefining your areas you're going to do business. If it's opens and pulls back early to the overnight point of control and consolidates here a while, we may get an impulse. We may not see sellers come in and aggressively push, which creates an opportunity for buyers, creates an impulse up into 16, consolidate at 16, push to 27, consolidate at 27, and the target is likely to be this wonderful 35 area. The 35 area, that's your 3-day balance point of control, essentially, and it comes into balance, and now the buyers still have a chance to make a run at 44.80 and push through the top. Okay? Is that enough to digest for a morning? Good luck today. It's 8:25, and mind your risk, and I'll catch you tomorrow morning. Take care.